The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
We saw pretty much a sea of red across the ag commodities on Monday to kick off the week, with beans, bean oil leading the way to the downside. Wheat was under some pressure as well. Corn market held up okay, though, in the face of the sell-off, and we're going to dive in and talk about what we're seeing in this market trade as some of that early harvest pressure may be coming into the grains and oilseeds. Well, that's one of the topics we want to discuss today with John Heinberg from Total Farm Marketing joining us here on today's program. John, always good to talk with you, and hope you had a good weekend.
Yeah, solid weekend, at least, with the exception of Packers giving up a game yesterday, but that's how it goes here in Wisconsin.
Hey, I'm a Packers fan too. I'm right there with you. I was not happy watching that game, but it is what it is. Well, I don't think many people were maybe happy watching the markets on Monday either. Grains and oilseeds, plenty of pressure here. As I mentioned, led down by beans, bean oil. I guess let's start there. What was it? The NOPA crush numbers that came out on Friday? Was that the reasoning? Is it seasonality in this market? What would you lean to as to why beans were down 20 some cents on the day Monday?
Well, I think a big factor in this window is seasonality, as we're starting to get into that time frame where beans are possibly going to be looking for their low. You know, typically we set that around the 1st of October window, and then we usually see some decent strength and possibly some follow through. But again, we are in a spot here where if you sell beans seasonally, we do see some downward projections, and obviously with some early harvest coming at us here, still got some demand concerns going on. That comes into play. Now, with that too, the open crush numbers were not good, but there's a sidelight to that comes in. That's that bean oil stocks that we have currently down to the lowest level since 2017. So that tells you that we're burning through bean oil pretty quickly. You throw in crude oils, move to the $92 a barrel level today, or at least testing that window. Diesel prices on the climb. There's going to be continued demand for bean oil. Now, charts look really cruddy after today's trade. Nice technical term, cruddy, but that's what they look like today. They're weak. Closing at the bottom of the range, breaking through some key moving average support. Still think we got some path of least resistance being lower. First off, November beans at $13, maybe that $12.80 August low might be a targeting point that we're going to go test here. And then we'll see if we get some traction. Bean oil was down well over $1 a pound today, so that just doesn't help. That chart looks like it's got some room to fall. But I do think somewhere in here, we're going to see that bean oil market turn back around, especially if crude oil can stay strong. And that's going to drive this bean market back higher, especially if some of those early yield numbers or that USDA report in October reflects those yield numbers getting sub 50.
Well, and to your point with crude oil, I think a lot of folks have been waiting and watching for crude to be a supportive feature throughout the grains and oil seeds. It's just not quite happening yet. And I think to your point with some of the seasonality plus some of the outside market headwinds with a higher dollar and more, I think all that's maybe outweighing the strength in crude right now, John.
Very much so. At this time frame, again, obviously the supply side of the equation, especially in corn, is still the driver of the market prices. It went to new lows today for the December contract. But again, let's take a look at that dollar, though. We're up to 105. If you go put that on a chart, that is some pretty good resistance here. We've been rallying the dollar index realistically since the middle of July. It's made a nice about a 6 basis point move to get to this level. Maybe the dollar in terms of the long side of it might be getting a little tired here. So let's keep an eye on that if they can't quite get through this window. Dollars and currencies, they have a tendency to trend like we've seen. It's trended basically 45-degree angle from July to this point that we can see this thing roll over and start trending the other way just on the money flow side of it. Now, if we get that type of a move, we got already kind of talk of a little bit of an inflationary environment, especially with crude oil prices being where it is. Maybe some of the fund money, if we get a softer dollar, might move back to some of these these soft commodities, when I go look at corn and wheat compared to a lot of the other charts out there, they're pretty much on sale. Even though the fundamentals may not be there for that support, but it might be enough to at least maybe get some money flow off this big short position that the funds have put together in the corn market.
Well, let's talk a little bit about the corn market and seasonality. I wonder if we're seeing some of that come into this corn market as well. But I'll tell you what, down 4 on Monday compared to the losses in beans and wheat. I was pretty impressed with how the corn market held in there, John. I mean, it was quite a good day, I would say, on Monday.
Yeah, I mean, it almost kind of feels like a bit of a win, because it really got pretty ugly early this morning. And, after Friday's difficult trade, we get some follow through. We put the new low in, poked under 470, and it just seemed like the buyers kind of stepped in right there. If you run a trend line under the lows going back into the May window, we're hitting that trend line here today. So kind of a key spot that maybe prices can turn around or at least continue to kind of grind and, sideways to lower. We'll see. So I'm a little bit encouraged, and I'm not saying we've turned the corner here, but we're at a spot. Like I said, if the money wanted to kind of turn this around, we could. We'll have to watch the cash market. We'll have to watch some of the demand as how it goes as producers get busy, get in the harvest. They're not exactly selling the product a little bit. Sometimes that can pull a little bit of money out and get this market to lift. But again, I think harvest pressure is going to be definitely something on the radar. We're expecting harvest to be close to 10% complete this week. Weather forecasts are fairly friendly until maybe mid to later in the week. Then we get some more rain coming through the Midwest. That could slow harvest down. So we'll have to see. And again, typically we put a low in here somewhere in this window between, 1st of August, end of September. This market's pretty oversold. And again, with the funds sitting on that short position, it's actually one of the largest short positions for this time of year in the last handful of years. And that was on Tuesday of last week. So they've pushed it Wednesday, Thursday, Friday, today. That could be a pretty hefty spot where they might just say, it's time for the money to flow the other way for a little bit. Again, maybe I'm optimistic there. We'll see. Obviously, the supply side of the equation, the demand concerns still just outweigh maybe some of the technicals that we could see in this market.
John, my chart analysis, I'll never claim to be a chart guy, but if I look at D's corn and I look at some of the trend lines here, and maybe you can help clean this up for me a bit, I would have to think that 440 maybe in D's corn could be a downside target here now that we've kind of broken through that 480 level. I mean, as you look at a corn chart, would that be correct? What are you kind of seeing as you draw some trend lines right now?
I think this 480, 460 window, I've been kind of talking about that for a while. We've been trading kind of within it. Again, we're down at the bottom end of that. Now, if that 460 level breaks, that does open us up for a drop to the 440 handle and maybe even down to the 420 handle, which, would be very not fun for our producers in terms of where corn prices were. That might be something we have to watch post-harvest or into the spring, especially if, the crop does come in okay and the demand does not pick up. Typically we get a little bit of a lift into the first part of November, and then things kind of roll over into that post-harvest low. So I'm pretty concerned there, especially with the carry in the marketplace. That may be some of what we're seeing happening here too with corn. We did see September come off on Friday, 462 in an area. Now December is down within 5, 6, 7 cents of that off the low today. Immediately we took that carry out. And sometimes when you get these heavy supply, demand concerned markets, and that 1 month drops off, the next month goes and pulls that carry right out and drops to it, which, for producers thinking about storing grain, that could be a bit of a scary situation given the extra cost from interest, handling charges, things of that nature, and then you lose the carry in the marketplace. So don't forget about protecting the value under the bin longer term if you're going to store bushels this year.
Wheat trade as well. I know some pressure there. Chicago, KC, and Minneapolis wheat on Monday. I mean, some of that chatter out of the Black Sea. We're watching that again. What's your overall assessment in the wheat market right now, John?
Yeah, a little bit of a profit-taking day. Again, it kind of feels like we put a little bit of a bottom in here, and we're a little optimistic that maybe we could see some turn last week when we were talking with you. If you go back and look at the June, reversal, looks very similar to the reversal we put in here on Friday last week, or not Friday, excuse me, Monday or Tuesday last week, that we can maybe get some lift out of this. So we'll have to watch how this wants to play out here. Obviously, again, the Ukraine situation today with them looking to go after their neighbors in terms of some litigation against them banning Ukrainian exports just kind of comes into play, maybe shakes the market a little here. So I think the key is going to be finding some footing. Okay, again, watching the money flow, things of that nature coming into place. But maybe right now we got a little bit of a short-term low. Maybe we're opening ourselves up for a bit of an upside. But I think just the weight of everything today kind of just pressured that wheat market to take some profits off the table.
We're having a conversation today with John Heinberg from Total Farm Marketing. John, let's segue over to the livestock trade Monday. A little bit of red there, feeders especially, triple-digit losses seen in the feeder cattle trade on Monday. But as you take a look at this overall protein sector, start with cattle. I mean, what's your take here mid-month?
Well, we'll have to see how things trade out this week a little bit. Obviously, new contract highs, pretty good money flow. There's actually still quite a bit of room for the funds to push that cattle market. When you look at where they were in their longest position in the last calendar year here, we're short of that right now. Now, a couple things I'm watching. First off, not surprised by the weakness today, given the trend in retail values. Last week, we were down about $7 on choice carcasses. That's going to be a big factor, I think, going forward is the consumer side of this equation. If they really start walking away from beef and we see that demand fall apart, that's going to be hard for this market to rally any further. But we'll have to watch. Today, though, if you go look at some of those front-end months, yeah, we're down slightly, but we're holding on to most of those strong gains from last week. So a little consolidation here at the top. You talk to producers, it feels like the packers are needing cattle. They're just not out there. So that's going to probably keep that cash market supported as long as there's still some value there for them in terms of those retail values. So today felt like a bit of a pause day. We had good gains in feeders, so it was a good chance for those feeders to go ahead and roll some profits out today. But I still think the trend is up here in this window. And we do have cattle on feed coming this week. So that'll be another reason maybe we just get a little bit choppy this week. See if we get some more number confirmation of where the supply could be. And then from there, if the cash market also agrees with us, maybe we get through that 200 level on those April cattle.
I know that 200 level on April cattle is something that everyone's really been watching closely. I mean, do we finally break through that number? Can we sustain ourselves at these higher levels in this cattle market? And I know we've been talking about this for months, John. So far, we're continuing to sustain ourselves and push the envelope just a little bit higher, it seems, each and every week, John.
Yeah, the trend is still definitely in the favor of the cattle market at this time frame. I don't really have anything that seems toppy in this market at this stage. Again, we'll have to watch the trade and how things go. And there's probably not going to be a daily type of a topping signal in terms of the technical side. It may be more of a weekly turn in the chart. Those are a little bit more trend setters when we see those weekly flips in terms of the market moving the other way. I think we're going to get through the 200 level. I do still think the money's there. Maybe we're hitting a good chunk of hedge pressure here in this window. I know, people are talking about that spot, and it's a great place to lock it in. And so they're probably looking at that at this time frame. But again, the numbers are still there. As long as the demand can keep this market a little bit motivated, I think we can get through that 200 level and add a little bit more value on top of that. But at the same time, I'm not being foolish with producers. We're talking about the put side of the equation. I mean, think about where we are. Maybe we got, $10-15 to the upside if things really get going versus an unlimited downside at historic highs. That's just screaming buy puts and let your cattle do the work to the upside.
About the hog market, are we maybe finding a bottom, so to speak, and some support levels here, do you think, in this hog trade? I mean, flip side here, what's your take over in hogs right now, John?
Again, that hog market continues to be just a wild ride, and 3 steps forward, 2 steps back, and down days that are hard, and then up days that are aggressive, and it's not a market for the faint of heart. Let's just put it that way. Let's just look at the overall trend. We're still trending higher. I kind of like the summer hogs right now. We got quarter hogs and pigs coming up here in a few weeks. I don't think we're going to see that expansion, just given the price of grains as well as just the lack of margins that are out there for producers. So if that's the case, those summer hog prices could look a little bit undervalued because hogs might stay in that tighter side. Plus at the same time, if we do continue to see beef as strong as it is, hogs are going to be a beneficiary of at least that consumer moving away from some of that higher priced beef product to a lower priced product like chicken or pork. So we'll have to see how that plays out. Again, we're still in a bit of an uptrend seasonally with that October contract until it expires, and then December kind of takes over. right now, again, I kind of like looking at that June, July contract, see if we can get some lift back up into the 100 level. And then for sure, then I want to make sure when we get to those points, that's when we want to make sure we're building that defense in.
John, how about that dairy market trade? Seeing plenty of red over there on the day, Monday as well, especially the milk market, class 3 milk. What's your thoughts of what's going on in dairy right now?
I don't know if there's a market out there in the livestock sector. I mean, they all take it away very quickly, but the milk market really can take it away just because of the lack of players in the marketplace. I mean, you're just looking 5-6 days ago, we're poking 1950 on the October contract. Today we're breaking through and it looks like 1750 is where we're headed. And that's a quick $2 in about a week and a half. That's a heck of a move, unfortunately, for the dairy producer. We had that run out because of the California weather and then the heat. Where's the production come? Now, we do have milk production report coming out this afternoon, so we'll see some of those August numbers and what happens there. But that cheese trade seems to have calmed down. We're talking mid 190s for cheese. Now we're in 180, 170 window, and that just points us lower here. Plus, add in the technical break today. It feels like we're on our way back down to the bottom of this range. Hopefully, we can hold that 1750 area in these front end contracts. Again, just the milk market just giveth and taketh away extremely quickly, and producers need to be on guard when those opportunities come, when you get those quick runouts, because typically this market right now is on the sell side.
John, great thoughts as always. Before we let you go, anything final you want to share or reiterate with folks today?
Again, just stay active here. Protect the bin. If you're going to put grain in storage this fall, again, there's got a lot more costs added to it. Now you're looking at interest rates up, significantly higher. We got the carry in the market, which isn't, the market's basically telling you to store the grain. But if you're going to store the grain, protect the value, whether you're selling calls against that carry or putting puts underneath, have something there. If the market bleeds it away, you're picking up some gains. So that's still something I'm going to be talking with a lot of producers about. Keep an eye on that soybean market. Like I said, we could have a hard push now, but if all of a sudden that bean oil market turns around or that yield number comes in below than expected on that October report, I think you're going to see a pretty aggressive reaction, especially given where the crush numbers can be in that demand in the bean oil market just because of the price of oil and diesel.
John, if folks want to reach out to you, get some advice there at Total Farm Marketing, what's the best way to do that?
Sure, love chatting with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John, always great to catch up with you. Thanks so much for joining us here today, and we'll talk to you next week.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing, our guest analyst here today on Market Talk. That's going to do it for the show. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.